Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. Well, I mentioned I may be doing it, my buy, a review of my buy recommendations on Sunday, but since I'm going out of town tomorrow afternoon, I thought I would do this evening. More people seem to watch on Thursday night anyway. So with that, let's get into it. Before I do, though, I did just initiate a buy recommendation on a new commodity, corn, and I think the potential upside is huge. And I just want you to be aware of that. I won't cover it on the new buy recommendation since I just posted it. So here's the S&P 500. I'm still bearish on the S&P 500. This is where I went bearish the last time, approximately 6,400. We're a couple 200 points above that. So not a big loss at this point. We still got our negative divergence, but this has to turn down soon. And this is like stair stepping higher, and it feels like it can't go down. But as we all know, things always go down eventually. So I just hope it's sooner rather than later. Let's take a look at a shorter term chart of this part right here, and I'll show you why I think it could be uh, very close to the top. So this is what we call an ending diagonal pattern where you have converging trend lines and you got A, B, C, I'm sorry, A, B, C, D, E. You've got all the touches necessary. Maybe tomorrow we get a throw over top where we open up higher and then by the end of the day close within this ending diagonal pattern. Ending diagonal patterns, according to Edwards and McGee, are found at the end of major market moves. And you also see ending diagonals at the end of bear markets. So we'll see how this plays out. So still bearish on the S&P 500. Again, I have maybe 12% at this point, short the market. Maybe I'm up to 13 now. And then I also have many stocks and ETFs that I'm bullish on. So that have outperformed the S&P 500. So still bearish on the S&P 500. Verizon, still bullish on Verizon. Had a nice day today, but here's the symmetrical triangle. The breakout, the price projection is 50. We're at 44. This has a 6.5% dividend. But I want to point out that if it gets to this pattern's price projection of 50, there's a much larger pattern that it would be breaking out of. So that would mean more upside. But right now we're looking for 50. Uh, I don't want to see these lows undercut. This is the commodity index trust. So this is a broad-based iShares commodity index, but it's about 60% oil and energy related. And I am cautiously bullish on oil prices. It's had its fits and starts over the last couple of years, still within a big consolidation. I like this because it also has other things in it like like agriculture, like some metals, some natural gas. It's more diversified, and to be honest, the chart just looks better. So this is a 2.5 year symmetrical triangle, so it's large. And if it can get a good close here again above where it is now, our price projection is 30, just about 31. So, and to do that, we really need to see oil get going here. So, um, that's where we're at. Still bullish. Platinum, still bullish on platinum. Here's why I first tried to go bullish. This is a huge consolidation. 1, 2, 3.5 years symmetrical triangle again. And I try to buy these on shorter patterns, smaller patterns within these large consolidations, because I find once they break out, they go so fast and so far that you're chasing. So I buy smaller amounts and small patterns within a larger pattern breakout. So here I purchased, I got stopped out with a loss. Here's where I bought a couple of weeks later, and here's where we are now. I got my stop now down at 117.5, and what I'm expecting is one more higher high, and we'll probably on that higher high in price, we'll probably get a lower high on our relative strength index, which will flash a caution sign saying beware, a change of trend is coming, and I will be out of it. Our price projection is 144. You know, if I had 6% of my portfolio on the breakout up here, I was probably down to 2%, and I probably raised that to approximately 3%. And if we get a new higher, because the reward to risk is not as favorable up here as it was down here. So the upside is limited. My potential upside in my eyes is 144 this pattern. So that's why I have less of it now than I did back in the early days of this breakout. That's why I like to get them early. The 10-year treasury. So this is everybody said rates were going higher, rates were going higher back when I went bullish in late 2024. The pattern said no, they're going rates are going lower, treasury prices are going higher. This is the 10-year treasury ETF. This is an inverse bullish inverse head and shoulders pattern, a man or woman hanging upside down. There's the neckline, there's the left shoulder, there's the head, there's the right shoulder. It broke out. It came back and tested that. Classic purchased that. Had my stop here. Been moving my stop up. This price projection arrived at by measuring from the bottom of the head of the neckline and projecting that distance upward is about 99. So, you know, we're about there. You know, uh, we don't look that overbought yet. And even on the daily, I don't have a negative divergence on the 6 month chart. So I've been every day this is up, I sell some. You know, that's what I do with everything. I sell on green or on white in this case, and I buy on red. You know, here was a good buying opportunity. So every day it's up, I sell a little bit. I was probably 8%, 7% long. The 10-year Treasury ETF. I also was the same in the 5-year Treasury IEI. I had probably 12 to 13% in SHY, the 1 to 3 year Treasury. I have a little bit in TLT, but not a lot. So I just keep whittling those down. You know, in this now, I'm probably down to maybe 3% in IEF and also in all those other maturities. Exelon, this has been a great stock for us. Here's the descending triangle with the descending resistance line, the flat support line. Again, a nice big pattern, you know, 2.5 years in the making. The bigger the pattern, normally, the more reliable they are. Here's where we bought, went down, retested the breakout, got up here on each weekly call. I'm saying, did you sell? Did you sell? Did you sell? Did you sell? And you know, in this, I think at one time I was about 5%, no, 5% in utilities, but only probably 2 to 3% in this. Up here, I'm probably down to 1%. Now I probably got 2%. I'm still, you know, our price projection was 51. We got up to 47, which is really close enough to say it's done, but we don't have a negative divergence or anything here. I'm thinking one more higher high, we'll see. So that's kind of where we're at. It's challenging, some overhead resistance on the shorter term chart right now. So that's where I'm at. Again, I own more on the breakout. Reward to risk is a lot better than where it is now. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Tell your friends and neighbors, family. There is a big winner that I had that I am very close to initiating again with a buy rating after it's declined quite a bit. So if it happens tomorrow, I'll try to do it tomorrow morning before I leave, going out of town for the weekend. Have a great evening, good Friday to you, and weekend to you too. Bye bye.